Hello everyone, it is Sunday, January 16th, and this is episode 46 of Odds Are, your S&P 500 weekly market forecast. All right, let's jump right into what happened last week. So if you remember from last Sunday's episode, I said that we were going to be going back down and breaching that 46.11 breach point, right? So I said that was my prediction. We were going to breach to 46.11. And I said that we were going to end up in that channel below the midline, the red midline, and above the Bollinger Band. So basically in that lower channel, the lower half of the Bollinger Band range. And that's exactly what happened. So right out of the gate on Monday, we went all the way down, breached to 46.11, went right up to the lower edge of the Bollinger Band. So you can see that nice long candle that breached the 46.11, went right down to the blue line of the Bollinger Band, and then bounced right back up within the same day and went right back up towards that midline. Then on the next day, we did go up towards the midline, actually breached the midline, closed above it. The next day we were above the midline, and then we went back down. So there was basically a ping pong game between the lower edge of the Bollinger Band and that midline. And then the last day of the week, we again went down and breached 46.11, just barely, but we did one more time for that week, and then closed smack in the middle between the red midline and the lower Bollinger Band range. So exactly how we called it. We had the breach. We stayed within the expected settlement range of 45.39 to 47.49, and we did not come close to the 44.88 parabolic SAR. All right, let's take a look at what the moving averages are doing. We've now flipped back to bearish. So, I mean, this is nonstop. We've been going bearish, neutral, bullish, bullish, neutral, bearish, back and forth. And I said that this week we were going to end up possibly going back to bearish, and that's what happened. So we're now back in bearish on the short term, still bullish on the medium and long term. Not enough downward action to trip those to neutral yet, but the year is young, right? All right, and now let's jump into what we're forecasting for next week. So we have breach points at 45.78 on the downside, and then 47.44 on the top side. But look how close that is. It's literally 1 point off from the upper settlement limit. So we are not expecting the market to close above 47.45 in this week to come, but the breach point is at 47.44. So what does that tell us? I'm saying that we have a higher probability of breaching the lower breach point, which has a little bit of room between that and the lower settlement limit. So 45.78. So we can go down, breach 45.78, and still close above 45.35. So that's the call for this week, is breaching 45.78, still closing within that. But don't look now. Check out that parabolic SAR. We're up now at 45.20. That's not that far off. We're only 15 points away from the lower settlement limit. Now, of course, in order for us to close below 45.20, we would have to close outside of that expected settlement range, which, again, the odds are 79.12 that we would close within that range. So, it's still very possible. I mean, you're only talking, just above 20, a little bit above 20%, but that's still a good chance that we could close outside of that range. So that 45.20, the parabolic SAR, I am not discounting it. I'm saying at this point, even though it's outside the range, it is not outside the range of possibility. All right, and let's wrap this up into the relative view for next week. So here you can see how that upper breach point and upper settlement limit are right on top of each other. Those two stand above the midline, and then look at the lower breach point, which is at 45.78. That's basically right at the lower Bollinger Band, the lower edge of the Bollinger Band range. So in order for this forecast to come true, we would have to go down, breach that 45.78, and it would be another, like a poke, basically like we had twice last week, where it would go down, just barely breach that, and then come right back up and make its way back up towards the midline. I think, again, we're going to stay somewhere in that lower range. I don't think we're going to be above the midline by the end of the week. We're going to be staying in that lower channel, and that's where that 45.20 parabolic SAR range resides. I do think it's still a little, it's going to be a stretch. Like I said, we'd have to be in that 20% occurrence range for us to close outside of it, but it's definitely not like, a 1% or 3% chance of it happening. 20% is still 20%, people. All right, and now let's take a look at, didn't see that one coming. All right, so last week we made some calls, happened just as we predicted them, and now this week, as we're going into the week, right, we're starting to put that parabolic SAR back into play. So again, I didn't think it was going to sneak up that fast. I mean, I know the math behind it, but it's very easy to become complacent sometimes, and these signals that one week are just kind of like, for reference, all of a sudden become very real. So this parabolic SAR is now entering into that very real territory where we could close below it. And so what we're going to do is next week, even if we don't close below the parabolic SAR, we're going to dive a little bit deeper as a refresher to what we expect when we close below that parabolic SAR. All right, and now let's jump into the quote of the week. And the quote of the week this week is by Mr. William Feather, and he is an American author and publisher. And William says, one of the funny things about the stock market is that every time one person buys, another sells, and both think they are astute. Oh, this is the nature of the market, right? You got the bulls, you got the bears, you've got the contrarians, you got the trend followers, you got all these different people, and they all have an opinion. And sometimes in this world, this digital age, we tend to forget that there are real people making these decisions. Now, of course, there are algorithms out there. There are, these robots that are trading, but who programmed them? All of these algorithms are programmed, right, using human reasoning. So we impose what we see as patterns, what we think are significant correlations. We set the parameters. We basically build these things to try to mimic what we think would be smart human investing or trading. And so at the end of the day, we have to remember that just because you believe that the position is a sound position, there's probably somebody out there that equally thinks that their position, which is the opposite of yours, is just as astute. So never think that you could be 100% correct. Always, always, always you have to factor the fact that there's this battle every single time between relatively smart people, right? People I would hope that are informed enough and that are spending the time to research what their trades are going to be and not just throwing money away into the market. But you're competing against some very intelligent people. You're competing against people that want to win just as bad as you do. And it's not something to be taken lightly. So, do your research, do your homework, read up, manage your risks, and of course, I'm going to suggest check out our show every Sunday. Hopefully this is of some value to you guys. And again, I encourage any feedback or comments. This time I will be only putting the YouTube link. I want to encourage you guys to go out there and subscribe to the YouTube channel. So I do post this on Facebook and LinkedIn, but this time I'm just putting the YouTube link because I want you guys to actually, click the like button, click subscribe, follow me on YouTube, and let's see if we can get some more people out there benefiting from the stuff that I put out every week. So until next week, have a wonderful couple of days here in the markets, and hope you guys have some success. See you guys next week.